Amcor making a sale there. What's your view on Amcor, Julia?
If we have a look at Amcor, it's a packaging company and they're across different segments, and if we have a look at this area, it's a little bit difficult at the moment. What we are seeing is flat volumes. We're seeing probably investment into automation, which is what's driving margins at the moment, but really there's quite strong import competition, and if we have a look at its business, well, the flat volumes and the expectations around flat volumes isn't helping. We have heard from Amcor that it's looking to sell a property for $120 million in Fairfield. Now that would mean around about a $60 million profit. However, the payments for this property are going to be spread over 4 years, so only $10 million on the exchange of the contract. But all in all, while it's a difficult environment for Amcor, and what we're probably going to see from the business is an emphasis on cost cutting, its share price performance has been very strong. We've seen the shares up 43% over the last 52 weeks. And I guess one of the things moving in Amcor's favour at the moment is the Aussie dollar. The lower the Aussie dollar, the better for Amcor, and that's really helping the share price.
Levels, but looking at this, the latest news, third banks looking to the exits. What can the company do to reverse its fortunes?
Well, it looks like lenders for Billabong are getting very nervous. Last week we heard CBA had sold its debt at around about a 15% discount. Of course, HSBC has sold about $20 million worth of debt for around about a 15% discount. So it looks like a third lender getting in on the selling. Of course, the key for Billabong here is funding. We know its balance sheet is not in a good state, but it is in talks with Sycamore as well as Altamont at the moment. And if we can see a refinancing deal there, I think the market would react quite positively to something like that. If not, we're looking at a highly discounted capital raising, and I guess the question would be whether Billabong would be able to survive in its current form. So it is a crucial time for Billabong. The lenders are nervous, shareholders also nervous. Last week we also heard that Perennial had exited its full stake from the business. But of course, Billabong shares are such a low base at the moment. They're a very low base, so even a 1 cent move is quite big for the company at this stage.
And Southern Cross, they were trying to get a new multi-year deal, programming agreement together from today. They failed to do that, so it's been extended by 1 month. Julia, what's that going to mean for TEN and Southern Cross stock?
This is important for both stocks. If we have a look at Southern Cross Media and this affiliate deal with TEN, it's around about 10% of TEN's revenue, and we know it's at a time when TEN's revenue is coming under a fair bit of pressure. In the first half, we saw revenue down by 16%, and the concentration, what the company was concentrating on was really reducing costs, and TV costs were down by 11%. But really, TEN's been struggling with its programming, yet despite this, it is expected that Southern Cross Media will have to pay more if it does do this deal with TEN. For Southern Cross Media, the key is how much they pay for this deal. If they are still under the current structure and they extend that out, that would be seen as a positive for the stock. I think the expectation is that we will see a rise in the fee that is paid for TEN, but of course if TEN doesn't get this, it's going to be a much bigger impact on TEN shares. Around about 10% of revenue will be impacted. Southern Cross at the moment helped along by takeover speculation and changes to the media laws, but I think the biggest impact would be on TEN. So watching this very closely, the next month is going to be a crucial time for TEN. If we have a look at Silver Lake, it's come out with an update. For the quarter, we've seen sales of just over 56,000, and for the financial year, production sales of just over 151,000. And really what's helped the last quarter is that we've seen Murchison coming online with commercial production, and that's really helped the output side. But of course, the key here for Silver Lake is the gold price, and the gold price has absolutely tumbled over the last few months, and this has been a huge negative. We've seen massive amounts of write-downs, up to $6 billion for Newcrest Mining. Last week we heard of an impairment from Kingsgate to the tune of $300 million. So I guess despite these good production numbers and despite Murchison now in commercial production, one of the things that the market's very nervous about is potential impairments coming through from this space. If we have a look at the new financial year, this financial year is going to be a huge one, and it's really just overlaying all markets is the end of quantitative easing and positioning for that, and that's going to be the key to this financial year. Of course, we're also watching China because we have seen downgrades still coming through for Chinese growth from most investment banks coming out. And today's going to be important because we do get the official China PMI numbers at 11 a.m. The last set of numbers were at 50.8, so watching this carefully given how nervous the market market is around China at the moment. Domestically, in terms of earnings, I think the lower Aussie dollar and the lower interest rates, this is a positive for the earnings environment. And in the current financial year, forecasts are still for growth of 6 to 7% in earnings for the market. The upcoming reporting season in August is going to be important to see whether that's upgraded or downgraded. But I think the Aussie dollar picture paints a pretty rosy picture for earnings in the medium term, but I think those global macro factors are going to be what drives the market.